Thanks for the tip, and thanks for the giveaway. There's going to be some more giveaways later. Welcome to our first event for 2025. What a year this is going to be, and what a way to kick it off with a homegrown story based here in our home state of New South Wales. I was very keen to MC this event, to chair this event, and Julian was happy to let me do so because it's very much a New South Wales focused story. And of course, being from the New South Wales Minerals Council, that's important to me. And it's also very much an Australian story too that we're going to hear today. We've got some legends in the room that I'd like to acknowledge. I understand we have Greg Matthews, former New South Wales and Australian Test cricketer Greg Matthews in the room. Where are you, Greg? Where is he? There he is. Can we give Greg a round of applause? Welcome, Greg. Dr. Ray Binns is in the crowd as well, former National Science Award recipient. Where's Dr. Binns? Where is he? And we have many other legends of the industry here in the room. There's one that I would particularly like to acknowledge, and that is Mr. David Moult. Where's David? Where is he? David has recently stepped down from his leadership role at Yancoal, and before that was running Centennial Coal, and before that many different roles throughout the coal industry here and in the UK as well. I've had the enormous privilege in this job of meeting so many fantastic people from the industry, and all the men and women I've met have been great. But it's always been so great to meet people in the industry, particularly the coal sector, the men that I look up to in the industry. They're always gentlemen. They always treat people with respect, and they love what they do, and they do it so well. And no one fits that bill better than David Moult. Thank you, David, for everything you've done for the coal sector, for our industry, and for me personally. David was on the selection committee for my role, so he's a great judge of character too. Thank you very much, David, for that, for giving me the nod many years ago. So as I said, this is a New South Wales story, and Queensland and West Australia are generally regarded by many as the mining states of Australia. But as I like to remind people in this role, we're the original mining state here in New South Wales. The great gold rushes of the 19th century started here in New South Wales. And they lit a spark that raced all around the country, touching places as diverse as the Queensland tropics, the open spaces of WA and the Northern Territory, the high country of Victoria, and places like Ballarat and Bendigo, once regarded as some of the wealthiest cities in the world because of the rich gold deposits nearby. We are the original mining state, and of course we are the spiritual home of mining here in Australia, with Broken Hill in the far west of New South Wales being regarded by many as the spiritual home of the Australian mining industry. So we are we're in for a real treat here with this story. Strap yourselves in, because we'll soon be hearing from our special guest, Pat Walter from Broken Hill Mines. Welcome, Pat. And he's going to tell us what lies in store as the next chapter of the Broken Hill story is written. But before we get to that, I would like to thank our sponsors. As we know, this club relies on its sponsors for their support to enable the club to do what it does. Our gold sponsors, AME and Baird Dolbear Australia. Our silver sponsors, the New South Wales Minerals Council, Taurus Resources, Fender Geophysics, TEAS, Veritas, CRE Insurance, Ioneer and Kingsgate Consolidated, and also the Australian Mining and Exploration, AMEC, APM Graphics, Research as a Service, and the Stock Network. Can you please thank all of our sponsors for the generous support that they provide you and all of us in this club. Now back to Broken Hill, and many of you know the story so far. With its famous line of load, Broken Hill has been a building block of our nation and our mining folklore ever since 1883, when boundary rider Charles Rasp stopped his horse to pick up what he thought was a lump of tin ore, and those samples were of course not tin ore but silver and lead, and the ore body quickly became the largest and richest of its kind in the world. The Broken Hill proprietary company, BHP, was subsequently launched by the famous Syndicate of Seven just a few years later. And to demonstrate that it's probably very good to sell high and buy low, they did the opposite. Some in the syndicate sold out before their shares were released, but the rest persevered and the story of national legend began. By 1905, 30,000 people called Broken Hill home, and by 1907 it was the second largest settlement in New South Wales after Sydney itself. BHP was born in Broken Hill. They left Broken Hill in 1939, and sadly BHP will soon cease all of its mining operations here in New South Wales within a few years, with their planned closure of the mighty Mount Arthur open cut thermal coal mine in 2030. But since BHP's departure from Broken Hill, more than a dozen different mining companies, mostly foreign owned, have operated there. But the Aussies are back. The Aussies are back, isn't that right, Pat? And now with Broken Hill Mines purchasing the legendary Rasp mine from the Japanese giant Toho and entering a joint venture with the prospective Pinnacles mine, we have another Aussie mining company set to write another chapter for the famed Silver City. So we're hearing from Patrick Walter. Pat Walter. His friends call him Pat apparently. Hopefully I can call you Pat. Pat's a qualified metallurgist, mineral economist and board executive with experience across technical and commercial roles within the mining sector and water treatment industries. He graduated from Melbourne University with degrees in chemical engineering and science. He also completed postgraduate studies including an MBA, a Masters of Science in Mineral Economics and a Diploma of Project Management. Sounds like qualifications for Miss America, Pat. In 2015, he was named Young Achiever of the Year at the Australian Mining Prospect Awards. In 2017, he founded New Century Resources, becoming Managing Director following acquisition of the Century Zinc Mine in Queensland, leading the company as it became the 13th largest zinc producer in the world. And in 2018, he was named as MNN Emerging Leader of the Year. He's also held roles as Managing Director of Carbine Resources, Executive Director of Primary Gold, CEO of Cradle Resources, and management roles with Rio Tinto, Citic Pacific Mining and Cleantech, and as Chairman of Future Metals Limited. Will you please join me in welcoming Pat to the stage?
Well, thanks everybody. Just sing out if you can't hear me well. I really appreciate the kind words there, Stephen, and I just wanted to extend my thanks to the Sydney Mining Club for putting this event on for everyone here, but also for allowing myself to represent the Broken Hill Mines team and tell the story, as we say, of the next chapter of Broken Hill. I think this is going to be a story that's in the national interest. We're a very young company in ourselves, so we only actually acquired the assets on the 1st of November last year after a couple of years of due diligence and work. I'm very conscious that there's probably several people in this room that are far more knowledgeable about Broken Hill than I am, and I will attempt to do it justice, particularly the history and its relevance to Australian mining, but please don't shout me down if I get a couple of dates or a couple of numbers wrong. So Stephen himself actually did a really good job of talking about the history of Broken Hill. I'll fill in a couple of more points there and some of that detail as well. It is relevant to our story, so just allow me to complete some of that. Broken Hill as an ore body, quite simply put it, is the largest and richest silver lead zinc body in the world by a margin too. It's not really even close. So 300 million tonnes at 15% zinc and lead, and 300 grams a tonne silver as well, continuously mined for 140 years. What's important to note from that is when Charles Rasp found it, it wasn't a 300 million tonne deposit, so they didn't know it was that big straight away. So this is a story of continuous discovery and growth over 140 years, and that projects another 100 years. This is an asset that still has oodles of life in it, and it will continue to grow. Much like all of the great assets of the world, you continue to invest in it, you continue to give it the love, and it will pay you back. And that's exactly what we plan to do, It's a differential about what the previous owners hadn't elected to do as well. So, quick numbers, over 1 billion ounces of silver, 28 million tonnes of lead metal, 24 million tonnes of zinc metal as well. True polymetallic ore body, which is very important when you think about economic drivers there. We have a precious metal thematic and we have a base metal thematic. So our sort of basket price, if you will, is linked to two different stories, which is excellent in terms of having a natural hedge. And as Stephen says, the birthplace of BHP, as Charles Rasp rode along and found the outcropping ore body, he actually formed the syndicate of 7 with the local station owner, and they sold 500 shares in Adelaide, Sydney, Melbourne, and Silverton. They sold them there. So that was 1885. The company was formed, and I know why the town exploded to be the second largest in Sydney, because in 1890 they printed £1 million in dividends. So you think about it. So it's a rocky outcrop hill in 1885. And it's printing £1 million in dividends in 5 years later. The growth was staggering for that period. So, great background. What does it all mean? You know, what's the relevance to today? Broken Hill Mines, our company, has a strategy to complete the full consolidation of the Broken Hill ore body for the first time in history. If you go back to 1885, there was 13 mining leases put over the Broken Hill ore bodies. You think about that, effectively 13 companies operating the one ore body. It's a staggering scale to be able to achieve that. Now, as a result of that, a lot of synergies were available as you could progressively consolidate over time. Prior to us getting involved, there was 3 companies that controlled all of the Broken Hill mineralisation, the line of load and the extensions there. So that was Toho, a private Japanese company, Perilia, which is now a private Chinese company, and also the Williams family, which are a notable Broken Hill family that have owned and ran the Pinnacles mine since 1954. And I'll just park the Pinnacles mine for a minute. I'll take you through that value proposition, because that's really exciting there. So the ore body itself, for those that don't know it, is effectively a giant boomerang. The Rasp mine is at the top, and then the sort of ends of the boomerang is Perilia's north and south mine there. And that's the traditional line of load, but the ore body itself extends further in a sort of a large sine wave to both the southeast, so to the southwest and the northeast. And you have 15 kilometres away, you have the Pinnacles ore body, and then if you head northeast, you have things like Potosi and Flying Doctor there. So it's a huge expanse of sort of 25 kilometres of various mineralisation. And really underdone in terms of exploration and development. So lots of opportunity to continue growing the resources and keep expanding them. So for us, we've created, I guess, the first step, and the train started to leave the station in terms of full consolidation. And the way we've achieved that is that we've acquired the Rasp mine, which has a relatively new plant. It's a 10-year-old plant, very nice, modern, and in really good nick. Rasp also has some existing mineral resources, about 10 million tonnes, and we believe that'll continue to grow. But the key thing we've done, the key value add we've done, is we've been able to marry Rasp with the Pinnacles mine. And Pinnacles is essentially the last known high-grade, near-surface virgin ore body in Broken Hill. So this is actually a story about getting resources, marrying them with infrastructure, and using them to fully utilise your fixed cost base. So there are 2 large operating plants in Broken Hill at the moment, that being the Rasp plant, 750,000 tonnes per annum, and the Perilia plant to the south, which is just 2 k's away, which is a 2.8 million tonne per annum plant. Both of them completely underutilised, 50% capacity tops. In fact, the Perilia plant runs at about 1.1 million tonnes per annum. So up to date, the fixed cost bases of both those companies, or both those operations, have kind of been choking themselves to death. So we saw that as an opportunity to say, oh, how can we fill this plant, and how can we increase the grade? How can we increase the metal units of production utilising this infrastructure? Fortunately, the answer wasn't a kilometre deep. It was 15 kilometres away. So we approached the Williams family. We were able to structure up an attractive deal, around a 70-30 profit share there, and now we get to work. And I'll take you through this value proposition, firstly about the Rasp mine, and then also about the Pinnacles mine and how we bring all this together. Quick snapshot of the company before we get into it as well. We are a private company. We're operating both mines at the moment. We have about 120 employees. We are also undertaking a public listing through the reverse takeover of an ASX-listed company called Coolabah Metals. That will conclude. A prospectus will hopefully be out tomorrow. I've said it out loud now, so it has to happen. So we expect to be trading and everything in about mid-March, which will be great. So it's been a really good support from the Coolabah team, and everyone has joined well together. A little anecdote: on the 30th of November, the Coolabah shareholders voted on the transaction, and I've never seen it before in my life, but there was 100% of the votes in favour of the deal. Not a single vote was casted against the deal. So it was pretty good validation of the plan we've got and the value that we're going to create for all the shareholders there. The numbers you see on the screen are on a post-listing basis there. We'll have a tick under 250 million shares on issue. About two-thirds of those are going to be fully escrowed, so it's a very tight structure as well. We've got a really good amount of cash and working capital, about $20 million. The assets are cash generative at the moment. The actual Rasp mine made about $15 million in operating cash flow last year. We're cash generative, which is great. We're going to be plunging all that back into investment. We'll talk about that in a sec. We also inherited a $17 million fully cash-backed environmental bond, which we have every intention of converting to a surety bond this year, harvesting that cash, using it for growth as well. So really nice sort of funding situation, and the valuation we've deliberately set to be attractive. So $48 million valuation, lots of peer comps around. I'm sure you guys can see them, particularly Polymetals, who is a very analogous deal. They actually acquired the Endeavour mine off Toho as well recently, doing the Spool family is doing some amazing things there as well. And they're capped at about 180 million at the moment pre-production. So really exciting story, and hopefully both companies can do great things out of what was a strategic decision by Toho to exit mining globally about 5 years ago. So as a result of that, they sold off Endeavour, they sold off Rasp, and they're just trying to deal with the legacy at the Abra mine over in Western Australia. Quick snapshot of the team. I won't go into too much detail there. Really good mix of commercial and technical skill sets. Below that is an exco that has lived and breathed zinc and lead, large-scale zinc and lead mining for the last 7 or 8 years. So we know exactly what we're doing. We're able to take over the operations and get straight into growth and development there. So we didn't need to be on care and maintenance or anything like that. Mark Hine himself used to be the ex-GM of Pasminco 25 years ago. We actually just poached the current GM of Pasminco, of Perilia, and he's come to work for us as well. So really exciting team that's forming that knows exactly what they're doing, and we'll get about to business. Okay, let's talk about the Rasp mine. Yeah, so this is a sort of an extension view of the Rasp mine, which you can actually see the Pinnacles hills in the background there, and that's Rasp running through the city. For those that haven't been to Broken Hill, the mine literally cuts the town in half, or more importantly to say, the town was built around the mine. That's how vast it is. But you could not get a better jurisdiction or location for mining. You're talking about 20,000 people, 25% of the town is directly or indirectly employed by the mines in themselves. There's 4 schools, 4 footy clubs, golf course, race course. It's a town. It's a 20,000 person town. So to have that town with 140 years of mining history, of servicing the mining industry, is immensely powerful. And the airport's a kilometre away. It's a perfect setup, and you're only an hour or two from Melbourne, Sydney and Adelaide, that sort of thing. So very nice setup. Looking at a bit of a deep dive at Rasp itself, as I said, there's 10.1 million tonnes in JORC resources still at the Rasp mine, running just a tick under 10% zinc and lead. Really conventional operation, sub-level open stoping, coarse grind, flotation. We produce a zinc concentrate, which is high quality. We produce a lead concentrate, which is full of silver as well. I'll tell you a bit of stories about those. The plant capacity is 750,000 tonnes per annum. And we have a residential workforce there of 98% residential of 120 odd people in place. So all set up, all running, and now we get about growing it. I want to show you some of the history of the last sort of of previous owners, Toho or CBH Resources. So the performance of the Rasp mine over the last 12 years. But first of all, I might give you some context and just talk about the ore body itself. So this looks like a busy slide, just ignore that. There's a whole heap of updates coming out about this which will make it a lot easier to visualise. But it's important to look at this as a plan view of the Rasp mine itself. Now Rasp actually consists of two ore bodies. You have the area in yellow up the top. That's actually known as Western mineralisation, and that's what's been mined for the last 12 or 13 years there. So Western Min has been known about for 50 years. It's actually considered the low-grade ore body in Broken Hill. Runs about 8% zinc equivalent, which by these days standards is quite high grade, but relative to the historical line of lode or main lode here, which runs about 17% zinc equivalent, it was always sort of considered to be the low-grade ore body. Now, the economic performance of Rasp over the last 12 or 13 years, as I said, has been 100% focused on operations from the low-grade ore body, from Western mineralisation in there. Part of our plan is to actually get back onto main lode and to start mining that. So there's development work underway. We've already contracted Burncut, and they're developing back onto the main lode right as we speak. So we expect to be starting to feed higher grade ore into our plants. It's about increasing the metal units and ultimately progressively getting better use of the fixed cost base. Of relevance here also to note is that this line of lode is being mined by Perilia as well, right up to these boundaries. So you have the south mine starts here for Perilia, and the north mine, you can actually see the open pit there for Perilia. So the line of lode has been mined for years. In fact, the neighbours are mining it right now. So we're going to take advantage of that, and we're going to grow the resource base through here and also start mining it as well, start feeding it back in. So we're doing something different. We didn't just acquire the asset and just hope the zinc price goes up or anything like that. So I'll just take you back now to the financial performance there. So this is all based on the Western Min. Fundamentally, this is an asset that has performed for Toho over the journey. You can see the top right-hand corner generated operational profit almost every year in its existence there. And interestingly, in the top left-hand corner, you can see ore throughput and zinc equivalent feed grade there. So it did have a capacity of 750,000 tonnes per annum. As Toho elected to make a decision to exit mining globally, they stopped capital investment across the board. As a result of that, they actually dropped the throughput down at the Rasp mine to what I call holiday mining. It was 400,000 tonnes. It's all been pretty easy going at the Rasp mine for the last little while. The party's over there, obviously, where we're going to be revving that back up to 750,000 tonnes. And importantly, you'll see the grade start to go up too. So you can see this running at a zinc equivalent grade of about 7%. As we start to blend in main lode ore, that starts climbing 10, 11, 12%. That is directly linked to metal production, and really importantly is the story of silver at Broken Hill, and I'll start to elaborate on that more. It is called the Silver City for a reason. It is full of silver. What happens now is that you see this metal production split, predominantly zinc production, sort of 60% zinc, 30% lead, and 10-odd% silver in those metal bars. The Western Min ore body is 38 grams a tonne silver. The main lode ore body and the Pinnacles ore body is currently up to about 150 grams silver. So as we increase throughput, as we get these higher grade feed sources into this plant, this bar is going to grow to 80,000 tonnes sort of metal units. But half the bar is going to end up as silver. So we're going to have a seriously high silver byproduct credit, which this story is going to evolve into being a silver story as much as it is a zinc and lead story there. I talk about everything in zinc equivalent out of a force of habit, but there'll be calls for switching to silver equivalent in due course, so that sort of thing as well. So, and just a little anecdote, you can actually, we've got validation of our strategy within these data sets as well. You'll see here in 2021, there's a major grade spike that occurs there. Now, what happened was in 2021, CBH Resources at Toho found a small section of the main lode in relatively close proximity to Western Min. It's known as the Lower Harvey Shaft, so a little lens that was coming off main lode. They decided to mine it, and as a result, bang, grade popped up to 10% for the year. And look what happened, the metal content pops up, all-in sustaining costs get smashed. It's exactly what we plan to do, but we plan to do it on a larger scale as well. So you can see the benefits of putting higher grade feed into this plant in there. So we're currently at one plant, one ore body, developing out onto the main lode to get one plant, two ore bodies. And then eventually we'll have Pinnacles online, one plant, three ore bodies. And we'll go into that into detail. So as I said, we've got Burncut in, developing out onto the main lode at the moment. There's a sort of schematic there of how that's working. The area in grey is what we're developing. It's about 1,000 metres of underground development to link up a historical incline with a decline in place. It's probably a little bit more expensive than how we could have done it. We could have just put in an air vent and then just a decline as well. But by setting it up with an incline-decline system, we've actually got much shorter trucking movements and ultimately lower costs as well. So we're setting it up for the future. And it's going straight onto the Blackwoods deposit of main lode. Blackwoods is about 500,000 tonnes at 18% zinc equivalent. So that's going to be some pretty juicy stuff that starts to get in there. About 20% of that development is complete, and we expect in the second half of this year, we'll be starting to bring that main lode ore into the feed there as well. The other thing we're doing at main lode is drilling. So the current JORC resource base, which I'll show you here, is not particularly big. It's sub 1 million tonnes, but that's sub 1 million tonnes of JORC certified resources. Now we know there is a multitude of other lenses there from reports dating back to the 1970s, which were never made JORC compliant, but you can literally walk up the adits and see these deposits, these lenses. So as part of our program, we're going to be discovering a whole heap of new ore that's in main lode and progressively putting it into the JORC resource. So we'll continue to grow that resource, that high-grade feed, and that represents a beautiful blend for us in conjunction with the Western Min operation. So we keep mining Western Min, but we start to blend in the higher grade ore at main lode, getting that average feed grade up as well. We actually have a third ore body or third known ore body at Rasp as well, known as Centenary. We're not even thinking about that in terms of our production profile. It sits below Western Min. It's actually quite embryonic in its understanding right now. There's only about 13 drill holes that are put into it. There's some clear opportunities to improve the grade and the size of that. The reality is it's fighting for relevance. It's got 3 ore bodies ahead of it, and obviously we're going to be sequencing those other ore bodies. And that's quite relevant for us to sort of talk about the commercial strategy of the business going forward. We have the ability to mine for an NSR. Yeah, so 3 ore bodies, we can sequence higher grade or lower grade ores into the plant depending on metal prices. So zinc price goes for a run, we'll absolutely preference Western Min. Now costs will go up, but we'll maintain an NSR. Conversely, the zinc price falls in a heap, bang, we preference main lode, we preference Pinnacles, and our cost base drops and we maintain that NSR. Now, the reason we look at it that way and we think about it that way is because A, it makes us robust through the cycle, makes us economically sustainable through the cycle, but it also gives us a chance to have a proper, consistent capital allocation policy off the back of that as well. So all good things we can develop being consistent. It also puts us in the right position to complete the full consolidation of Broken Hill. So Perilia, unfortunately, doesn't have the advantages that we've got. They have one ore body, they're 1.2 kilometres deep, mining with a spoon at the moment. So life is pretty tough over there, and while it's obviously a private entity, not a lot is known about it, we know quite well that they're not making any money as well. So it's a matter of time. We've got a lot of work to do, but we need to make our current business and our current assets robust and sustainable over the next 18 months or so. We're in a very strong position then to ultimately complete the consolidation of Broken Hill for the first time in history. Some pretty pictures here of plant and sunk capital and operations. The reality is Toho put about $450 million into building this thing. So CBH Resources put about $450 million into it. So as we said, our fully operational plant, we've got all the fleet, broken stock, ROM stock, stores. You're walking straight into an operation. We didn't shut it down the first day, we just kept it going in there. The environmental bond is in place, and you can see you've got all the gear to just continue operations. From a metallurgical perspective, I'm almost ashamed to say it's actually quite boring. It's really easy, you know. So conventional coarse grind flotation. When I say coarse grind, 200 micron flotation. Now, At Century, we were punching stuff down to 6 micron. That's obviously fine grind, that's hard work. 200 micron flotation, what does that mean? Lower power costs relative to other operations. And so we have that advantage that we can attain recoveries without strong grinding in there. You can see in the bottom left-hand corner there, life of mine, or since 2013, average recoveries have just sort of been bang on industry average. 88, 90% recovery of zinc and lead, 75% recovery of silver. All the silver reports into the lead con, which is great because you get paid for it, you get better payability terms in putting it into the lead concentrate as well. So simple met from this process, which is a refreshing change, let's say. Concentrate quality, excellent. Been in demand for decades. So we produce a 50% zinc con, no deleterious elements. We do not get charged deleterious elements, and we're getting negative treatment charges for it right now, which is absolutely amazing. And for those who have been in zinc and lead mining in the past, negative treatment charges are pretty novel, but we'll take it every day of the week. And the same with the lead. You're talking about a 65% lead concentrate with up to 1,000 grams a tonne silver. Keep that in mind. That's Western Min. When we start to punch in Main Lode and Pinnacles, that silver grade's going to 2.5 kilos a tonne. You're talking about Cannington-style quality lead concentrate. Huge demand, attracts a premium in the market, and we have the ability to we put it in boxes. We can either send it down to the smelter at Port Pirie for the lead, or we can send the lead to the Port of Adelaide and export it. All the zinc is exported through the Port of Adelaide. Again, there's a smelter in Hobart. Once you're on the water, you send it all over the world. We sold around 2 million tonnes of concentrate through our time at Century. We have all the connections to all the smelters around the world. We've sold con to 12 different smelters on 3 different continents. So it's been really useful for us to have those connections in terms of locking in offtake financing as part of securing these deals as well. So again, the product quality has been known about as a high quality concentrates that have been in demand by smelters all around the world for generations. The Broken Hill quality, always known as great product. So that's Rasp. It's the engine room, it ticks away, it's operationally cash flow positive. We're going to plunge investment into it, we're going to bring Main Lode on, and we're going to make it even better again. What I really want to talk to you though about is Pinnacles. Pinnacles is the equity story here. Pinnacles is the thing that the market knows nothing about, but is going to learn a whole heap about over the next couple of years here. So 15 k's out of town, well, let me just try again. Located 15 k's out of town, Pinnacles has been owned and run by the Williams family since 1954. This is an established mine, a 40-metre deep open pit, 4 levels down to 100 metres, and a dinky little processing plant doing like 50,000 tonnes per annum capacity. This mine, though, has been running for decades like that, and no one knows anything about it at all. Case in point, there's 55,000 metres of drilling at the Pinnacles mine. Not a single metre has ever been publicly released. So the benefit for Broken Hill Mines is that we now get to tell the story of Pinnacles, but it's already there. It's already well established. So the news flow, the backlog in news flow we have is massive. We have a conga line of news flow waiting for our public listing. So we'll be able to not only keep developing Rasp and growing that story, but the Pinnacles story will unfold over the coming years as well. There wasn't even a JORC resource over the ore body, certainly not one that had been updated for decades over the ore body until January last year. It independently developed 6 million tonnes and nearly 11% zinc equivalent, and we know those grades are going to grow as well. Outside of that, there's a 6 to 15 million tonne exploration target at similar grades. If the JORC resource and those exploration targets are 20% of the known mineralisation on site, I'd be gobsmacked. This asset is going to be a monster. It's a big asset, and the Williams family have been mining the tip of the iceberg of it for decades. And it's one of the reasons why this deal occurred. Craig Williams runs the mine at the moment. Craig's dad used to run the mine. Craig's granddad was killed at the mine. There's a huge history, there's a huge family legacy that occurs here. They've kept drilling it, and they've kept finding more and more ore. The realisation is, if they put the ore through the current plant they've got, they're going to be there for 300 years. So Craig needs a bigger plant. So we approached Williams family, obviously spent a lot of time with them building up the relationship and our proposal around the consolidation of Broken Hill. And Craig said, if you get a hold of the Rasp plant, do a 70-30 profit share over the Pinnacles mine. I said, give me a month, and came back in 2 weeks, and the deal was done. So all of that evolved over the middle of last year, and it's resulted in a value proposition that we can now bring to the market and really show and grow as well. Some other sort of pretty pictures and anecdotes about the Pinnacles mine. This is an evolving story here. So it's actually been known about since 1885 and mined intermittently. You think about the ingenuity you need as a small, I don't want to say mum and dad operation, it's a small scale mining operation to build 4 levels down to 100 metres. You hand build your own processing plant as well. So there's no engineering firms getting involved here or anything like that. This is the school of hard knocks and ingenuity that's been developed here as well. Craig actually got approached in 2007 to IPO Pinnacles. Now, 2007, great year, metals are flying, everyone was doing good things. Got approached, as Craig describes it, as some shiny shoes from Sydney to come out. They came out and said, we're going to do a $400 million IPO and we're going to build a 3rd massive processing plant in Broken Hill, which doesn't sound like the best idea now that the other 2 are underutilised. So anyway, they took Craig to New York. He had a 50-kilo briefcase full of super high-grade silver core, sort of running around saying he felt like Crocodile Dundee going around New York, Aussie as a meat pie. Anyway, 2008 GFC hits, deal falls over. What does Craig do? Just goes back onto the mine site, jumps on the drill rig, drills 3,000 metres of core, doesn't assay a single metre. And everyone often says, why would you drill core and not get it assayed? But you really get an indication of the mark of the man here. He doesn't care. He's a miner's miner. He can see the mineralisation in the core and he's going to go and mine it. What does that mean for Broken Hill? We've got 3,000 metres of core sitting at the assay labs waiting for our public listing. So the news flow that rolls through is awesome. And we know what's in it, but we can't report it yet. But very much a silver story coming out of Pinnacles as well. That's actually the briefcase you can see there that he was trying to roll around New York with as well. So we will we'll drill, we'll continue to develop Pinnacles as well. Great news flow, lots of story. Ultimately, we've got to get it into production. We're not just going to sit there staring at it. It's not a piece of artwork. Get it into production. So as it stands right now, we'll be looking at production in the back end of 2027. We are seeing a lot of opportunities. That's an underground only operation, but we are seeing some pretty good opportunities for early stage open pit operations as well. So plenty of news about that as well. So the setup's pretty good now. We have the company listed by March, the team fully charging both operations at Western Min, burn cut fully charging to get main load online. We'll start feeding that material in to the plant the back end of this year. We know exactly what that does for metal production, and we know exactly what that does for utilisation and fixed costs and all-in sustaining costs as well. And all the while unfolding the Pinnacle story at the same time. And we'll see if we can bring that in much faster than we can. We fully utilise our plant with high-grade ore, which makes us a really robust company. And then we'll see if we can use that to consolidate the full line of load for Broken Hill. And I'll give you a part of that real blue sky vision here now. There's a lot of Imagineering in what I'm about to say, but it is relevant in that we'll fully utilise our plant, 750,000 tonnes per annum. Let's get some 10-11% feed into there as well. We'll punch out 80,000 metal units of zinc and lead. It's a good producer. It's not too big. It's not too small. It's a good operation that can run for decades in there. If and when we consolidate the full line of load and the acquisition of Perilia occurs, we can actually start to fully utilise their 2.8 million tonne per annum plant. So we preferentially feed their plant. The Rasp plant is converted to tailings reprocessing because there's about 200 million tonnes of tailings there as well. And then you're starting to project an opportunity or a mine and a company that goes from 80,000 metal units to north of 300,000 metal units. and all of a sudden you're one of the top base metal producers in the world. So whole heap of hard work, whole heap of blood, sweat and tears to pull something like that off. But the fact that I'm not talking about a project in the Arctic Circle or a $3 billion capital number, we're talking about an asset, a tier 1 jurisdiction that's got a community that's mined for 140 years. And we have the exclusive opportunity to pull that off. That's pretty exciting. But that's really, we've got a whole heap of work to do before we even get to the start line on that one. But certainly the vision is there, the team's in place, and that's the strategy, progressive execution of the full consolidation of the Broken Hill ore body for the first time in history. That's it for me. Thanks very much. I appreciate everyone listening.